We're going to have a very light conversation about the future of European banking.
Okay.
How is that going to go in the next 12 months?
So, sorry to quote one of your competitors, but there was a great article in the Wall Street Journal.
Oh, you're killing me, Anna.
Sorry. But you asked for it. No. So there was a great article, really check it out. It says, like, the place to be in a fintech is in a bank, something like that. So I do think more than Europe, what we're all facing is a really increasingly, I'd say, urgent need to really change faster. So I always say that, you know, a lot of our kids, I mean, I have older boys, as you know, and their friends, but anybody from 20 to 30 is now opening still maybe an account with Santander, but then they do all the FX and everything else with Revolut or Monzo or whatever. And so I do think banks in Europe and in the US, by the way, so that's a common, to me that's my top priority because that's something I can control, right? So governments, regulators, etc. You know what? It's a context. I say it's like the air we breathe, and we have to get on with it and compete and just be better. And we just have to be better, not just than our peer banks, but everybody else that's competing for our customers. And again, accounts tend to be still with us, but payments and value-added services are going to others. And if you look at the stock today in the UK or Europe or US, it's still mostly with the banks, but the flow of business is increasingly with others. And so to me, that's what Europe needs to get right. And that's something we and all of us as consumers need to fight for, because we want and we welcome competition, but it has to be fair. And I've said this many times. There is not a fair level playing field right now on data, on capital, on resilience for payments providers that actually compete with us and banks. And so that is, to me, the most important aspect. I haven't really answered the question you wanted me to answer, right?
No, I think it's good, and it's a big challenge.
Because if I keep on thinking Europe and US, and Europe grows less, US grows more, but that is a fact I have to recognize. I'm not going to change that. It's up to governments. So we just need to focus on what matters, and what matters is consumers and attracting the young generation to come to Santander and open accounts with me and do the business with me, and that is really what I'm fully focused on.
The first time I met Anna Botín, actually, I remember you very well in a meeting room, and it was an editorial board at Bloomberg, and you said, by the time I leave, someone here will have gotten a mortgage with me. Because you're always focused on the clients. You're always focused on actually how banking changes. How do you think the new generation banks differently?
I mean, again, I was in the US for the World Bank, and I did, I think it was with Tim Adams, and I said, look, we just launched Open Bank across the United States. It's a fully digital bank where we have built both the back and the front end. This is differential because we have the scale to build our own tech. So this is very similar to Nubank. We've built our own core banking, we've built our own front end, we've launched a digital bank across the US, which means we've had to go through the Fed, through all the approvals to run on AWS, etc. And I was telling Tim that I was in Miami that weekend and talking to one of the waiters from Argentina, and I opened an account. And my surprise was that a 20-something-year-old waiter from Argentina in Miami actually told me he had savings of $50,000, which is, very attractive customer for online bank. And so, yes, I do try to open accounts, and I do try to, because, if you open accounts to those around you, if something doesn't work, they're going to come and tell you. So this is really, I think, very important. You have to, not just your employees and your friends and everybody, but really try to get feedback on what is working, what isn't working.
But how much time do you spend thinking about how many accounts, the younger people will have compared to now? I mean, does it really change in the dynamics of actually how you operate your bank and where you want to be present?
It absolutely changes because, to get to build great products, we're only as good as we are on the mobile today. Each one of you spends more time, each one of us more on the mobile than going to a branch or, talking to people in a bank, which we still welcome and we still believe in personal relationships. But we're only going to be as good as our technology, and our technology is only going to be as good as our people. And so I do focus very much on what the end product is. Does it take you 1 click or 2 clicks to pay? Do you all understand that Santander UK offers you Apple Pay, but actually Apple takes 2/3 of the commissions, right? And then if you put your Santander UK card into your Apple Pay, actually that economically is very different for me. And of course, the reason you do that many times, it's more convenient for you because you do one click, because until recently, and I'm not sure it's happened in the UK, the NFC antenna was controlled. Now they have to open it up. And again, that's good for consumers. Obviously, I benefit, but if you have more choice and you can actually have, if I build a great product, it should not be because you have what I call critical infrastructure that you control, and it's a closed loop, right? So yes, I spend a huge amount of time because that is really what's going to make me be more profitable and grow better, and my bottom line will reflect that. It's already reflecting that, actually, in many cases.
Is there a test market? So I want to talk about the US bank and what you see there, but is the UK the kind of linchpin on what works digitally and what doesn't?
Well, UK has been way ahead of many other markets, probably has been leading a lot of the sort of digitization, sometimes for good and sometimes I think it could be improved in terms of who bears the burden, and is it the bank or is it everybody that's involved in that transaction that should actually be accountable and responsible, as we're defending here. But yes, when I was San UK CEO back 10 years ago, the UK launched faster payments, instant payments, way ahead of other markets. And I think in that it has been a leader, and there is a lot of opportunities for the UK to continue to lead in innovation. And, I think there's some things that could be improved to get the UK to continue to be at the forefront.
How's the US bank doing? So we have Donald Trump. We're expecting, there's a big expectation in the markets that he will deregulate, certainly, and benefit a lot of financial markets.
So, the big issue for the US and the new administration has made the point, and I have made the point actually also for Europe and the UK, and in that UK and Europe, continental Europe are very similar, is that governments have to some extent abdicated their responsibility to govern, not just to regulators, but to supervisors, to agencies. And this is a huge issue, right? Because we elect governments to actually make the rules, and we then have agencies that implement the rules, but they should be consistent with the mandate. And a lot of these agencies, and even more in Europe and in the UK than the US, are actually interpreting those rules in such a way that they're de facto making new rules, which is not why we put in place the agencies, right? And there's a famous Chevron ruling that you must have seen, which actually points to that. So my fear is that, and I do think our biggest substantive issue in the US, but even more in Europe, is that, actually much more in Europe and the UK than the US, is that, we need to assume risk. We cannot protect each one of us individually from everything that could go wrong, whether you buy something in the supermarket or health or from a bank, because then you're actually getting the opposite effect. You're actually harming the most vulnerable people. There's a lot of issues in the UK with conduct. That makes banks, but everybody, much more sensitive. Oh my God, if I, launch this product, what's going to happen to me 10 years, 15 years down the road? And that is a huge issue, which, again, I think the US is likely to get ahead again of Europe. And we do need to look at that, because that is the reason they grow much faster than we do.
And so the gap could widen, actually, between European banks and US banks.
Well, I tend to be positive. I wouldn't do this job otherwise. In spite of the Wall Street Journal article, that gives me hope that we're now in the right place. But I don't work on the basis that things are going to get better from a regulatory or even supervisory point of view. And that's why I tend to focus on what can I do to innovate. How can I be closer to my customers? And, Santander has 170 retail consumer customers. That's what we are. 70% of Santander is individuals and consumers. 30% is corporate. So I think we need to focus on that. But I do think that, what is it my customers want? And by the way, it's not just the young people. It's everybody here and all of us that want better. We want products that are competitive, agile. I think the gap could get wider, but I take some encouragement from Draghi and other reports that put focus on productivity. And even though a lot of the things the structural measures that could be taken to improve productivity actually depend on Brussels, right? But the shorter term, like taxes, others are national. So I do think that one thing that works in Europe and Brussels is oh my God, the Americans are going to get ahead again. And that's the one thing that seems to work. And I think, I mean...
Healthy competition.
Yeah, healthy. US has grown like double Europe in the last 20 years. I mean, it's unbelievable, right? And so again, I still believe the European system is the best. And I always say there's a range of options. If you're on the right side, Europe is by far the best model. But right now, we're not there. We're on the other side. So there's hopefully we go to the other side, and then we have amazing assets, we have people, infrastructure, the social economy, but we need to understand it all relies on growth. And growth comes from investment. By the way, banking, and I'm not just talking my book, 90% of lending in continental Europe to SMEs comes from banks. So either we, understand this very basic issue, that's what's going to lead to investment and growth and jobs and productivity improvements. So we really need to fight for that.
You're close to your clients, being individuals or also some of the companies that you service in Europe. Are they worried about tariffs? Are they worried about refinancing?
Well, I mean, companies vote with their feet, so to say, right? And so if you look at the IRA, which has been labeled as pro-American and anti-Europe, I mean, if you really look and talk to the companies, and I do, my customers, they say it's been designed in a way that incentivizes anybody, whether American or non-American, to invest, and if you do well, then you get some benefits. And so if you look at what our customers are doing, they're investing more in the United States than in Europe. So that should tell us something, it's the carrot and the stick, right? In Europe, we believe in the stick. US believes more the carrot and the way they designed that. So yes, I do think that investment right now, as it is now, will continue to favor the United States. But again, we have identified the issue and we just need to act, right? And I do think, as I said, that this competition with the US is one of the things that might make us move.
Is Europe overbanked? Do we need cross-border consolidation?
Well, if you as a company are in a market that doesn't grow too much and you're already sort of the biggest or one of the biggest in your country, the only way to grow is actually to do in-market consolidation. That's what we're seeing right now. Cross-border consolidation right now in Europe is very hard. The numbers just don't work, right? And we saw that in the crisis 15 years ago, right? If you have a euro, but when there's a crisis, the euro becomes the euro in Germany and the euro in Italy, you know what? It doesn't work. And there's many other things that we need to fix. So I do think for now, things have to change a lot before you see cross-border consolidation, but you will continue to see activity in market because there is, the space for growth is very limited given the geographies that a lot of the European banks are operating in and the markets. The tendency will be to get scale, to get profitability and growth.
But will we ever see a proper banking union in Europe? And is that something that should be a goal as, again, Europe faces many challenges? So
banking union requires that, first, it's hard to have further consolidation without some kind of fiscal alignment. Second, banking union requires North and South to understand that, there is a cross guarantee effectively, which we did sort of with COVID. And I think that is something that can be discussed now, but it would probably take longer. I do think there will be, other steps taken in the next, hopefully, few months. For example, securitizations, which has been discussed for years. It seems now that's something that we're moving on. So I do see signals that we are understanding that we actually need to do things, not just have a great diagnosis, but take action.
What do you see happening in emerging markets?
Look, the big issue for the world is, and I was with a minister from a developing economy not just so long ago. What they say is, look, you in the developed world need to get your act together, get stable macro policies, get growth. That's the best help you can give emerging markets, right? And that's not happening. You look at the climate transition. what we're doing with the climate transition is not a transition, but we're saying green is good, brown is bad. But you know what? The world is brown, right? And if we pretend to impose our rules from Europe and rich countries to developing countries, that's not going to happen, right? And so what we're seeing is a lot of these policies that are well-intentioned, but are not considering what now is called the Global South. So that's something we need to fix. The climate transition is a transition. It's not like green is good and brown is bad. It's like we need to finance the brown to become green, and that means, and by the way, emissions are going to go up. And somebody has to say that somewhere, and the question is that they go up less and we invest more in the transition. We help countries, emerging markets, and people in developed markets that cannot afford to have a new home or improve their energy, go to renewable, it's too expensive, and so on. So, but going back to emerging markets, I do think there's much more growth, and like Latin America, where, as you know, we're the #1 bank there, I think there's a huge opportunity. There's, just 2 countries, Brazil, Mexico, and Chile, are 370 million people. These countries will do better, and as I say, I think not all developing economies are the same, but in Latin America, which I know well, I always say the lows are always being higher. You have stronger institutions, their accounts, national accounts look better than they have ever looked in general, and they're putting in place the right policies. So I do think there's differences, but I think what emerging markets need is that we understand first that we cannot just, expect everybody to do the same as we do in Europe, and that they need more time and they need different policies, and that has to be paid for. And second, that the best help we can give developing economies is to have, relatively stable and higher growth and low rates in the developed world.
So would they be ready for Trump tariffs? There's a concern of, Trump tariffs hitting inflation, hitting a lot of these economies, but also a higher dollar.
Well, I mean, the structural trends in the economy are mostly inflationary. So if you look at demographics, you look at defense spending, you look at decarbonization, those are inflationary trends, structural trends. But of course, again, there will be ups and downs. You ask me, what are the biggest uncertainties in the world right now? Is energy prices, what happens with energy prices, what happens with very high levels of government debt in general in developed economies, and of course, geopolitics, we're just discussing, which had been a source of stability for many years, now are a source of instability. So I think those are the issues that we need to understand better.
How does that play out in markets, but also in customer behavior? Is it, does it take the first half of next year to truly understand what people are worried about and how they behave in trading? Well, I mean, again, looking at the positive side, we were super worried about a hard landing, right? And actually, it's a pretty soft landing, right? So I do think the world is, well, to me, the bigger point is that we're in the lowest growth globally in 50 years. And I think that is the big issue. And I keep on saying that growth is the big uncertainty. But it's not the same, and markets are going to be reacting and consumers differently, right? We've had huge amount of COVID fiscal support in Europe, by the way, in the US also, big amounts. And so that has now come to an end, right? In Europe, not so much. We still have some of that in some countries. So I think consumers, and if you look at the US, for example, on the one side, I think there is pent-up investment. So people have been waiting to buy a car, buy a house, invest in the business to see what happens with the election. So I do think you will see some pickup in demand in the US. But at the same time, the majority of people are not better off. Because if you think about the 3 things that most consumers spend most of their income on, which is energy, food, and housing, the cumulative increase, again, talking about the US, has been pretty big, right? And so people are still not feeling great. So I do think, these things we'll see how that balances out. But investment obviously takes longer to see. So net, I think the US will grow less relative, and maybe Europe a bit more. Mm-hmm. I think tariffs are going to be very targeted and will be one by one, and let's see what happens. I mean, Europe buys a lot from the United States. Our economies are not just German cars and French wine and
Spanish ham, right?
That would be not bad.
Right. That would be pretty good, right?
Pretty good.
A German car, Spanish ham, and red wine from France. Spanish red wine is pretty good too, by the way. Better value for money. Check. No, but seriously now, so our economies are services. Who do we buy services? And nobody has done this, and I've asked a couple of people in think tanks in the US to look at this. If you think about 70, 80% of the economy is services, what are the services we buy in Europe? Who do we buy them from? American companies.
I was going to say UK.
No comment on that. Yes, but far, quite far. So no, I'm serious. All the services, banking services, wholesale banking services in Europe is mostly American. All the tech services, all the digital merchants that are taking space from the high street, they're all US. So, I think Europe has a very strong position in terms of, guys, yeah, we might sell you German cars, and by the way, now it's Chinese cars. But putting that aside, the economy is services. Services are dominated by American companies, and so I don't think the discussion is as obvious as it seems. But net, I do think, with or without tariffs, this is inflationary. And by the way, the reason I'm much more optimistic about what happens, and hopefully we understand that we need to do something. I do think we're at a crossroads. I think we know what has to be done, and there are opportunities like the green transition technology that we can actually invest and improve productivity, right? And again, competition is the best, the best incentive, and at least that's the only thing I've seen that works in Brussels. So I do think that we might, do the right things and make the right choices, which have to be pro-growth.
What would be, a final question, what would be the biggest difference that the EU could make? Is it something on, finance and supervision to align with the US, or a new energy policy?
Well, you have to choose one, or can I have two?
One.
So the one thing that's relatively, and I say relatively easy, both for the UK and for the EU, is that, and this has to come from governments, is the mandate. So I said it at I know you follow me on Instagram, but I had 4 slides for the banking conference, and I had the president of the European Parliament, Metsola, that I then did a panel with, and she repeated what I said, and this is really important, because I don't think it's that hard. It's not even going back on any regulation. Just don't change the regulation. By the way, I gave a fact in that slide where in the last 5 years, the US has made 5,000 regulatory changes, Europe has made 13,000. This is not the UK. But let's assume you leave everything. Well, all I said is, let's take a pause. And she picked that up. Let's take a pause and not pass any new regulation for some time until we understand what we've done, what the consequences are. And related to that, so it's still one, the mandate to supervisors, going back to the Chevron ruling. This is super important. It's a bit obscure. People don't understand. Even my own team keeps on talking regulation. No, regulation. Let's not do more, but let's change the mandate to supervisors. By the way, this is not just banks. This is not just banks. It's every sector of the economy. Every sector. Health, retailing, you name it. And this is equally intensive in the UK as it's in the EU. So give supervisors, agencies, not regulators, a mandate that is balanced. And balance in the sense, yes, protect consumers, but have an equally important mandate for sustainable growth. Because I don't think that's that hard. And that would make a huge difference.
Anna Botín, thank you so much for joining us.